Welcome to Iraqi Dinar News, your daily briefing on the financial developments shaping global currency dynamics. If you've ever wondered whether a modest investment today could lead to meaningful gains tomorrow, then 2025 might be the year that brings those possibilities into focus. Interest in the Iraqi dinar, IQD, and Vietnamese dong has surged recently, with both currencies seeing notable performance in the foreign exchange market. While mainstream financial headlines chase crypto drama or tech stock surges, something quieter, but potentially powerful, is happening behind the scenes. In the early months of 2025, both the dinar and dong have posted measurable progress in market value and trading activity. Investors who previously overlooked these currencies are now revisiting charts daily. This uptick isn't based on pure speculation. It's being driven by underlying improvements in economic indicators across both Iraq and Vietnam. International partnerships, policy changes, and shifts in export activity have fueled momentum. The key question is no longer whether these currencies are moving, it's whether those gains are sustainable. That's why smart planning matters now more than ever. Take Vietnam, for example. The VND, which was historically traded around 23,000 per USD, shocked many when it moved closer to 20,000 per USD in early 2025. That's not a minor swing. This appreciation stems from Vietnam's growing role as a manufacturing and tech hub in Southeast Asia. Foreign investment is rising sharply, and tourism has made a full return post-lockdowns, pumping fresh revenue into the economy. These developments are strengthening the dong's profile among traders. Still, financial analysts are cautioning against euphoria. Sudden currency appreciation can vanish just as quickly, especially if external pressures disrupt growth. That's why it's critical to follow the core fundamentals of each economy, not just viral headlines or social media buzz. Turning to Iraq, the IQD has also seen a resurgence, trading as strong as 1,200 dinar per USD, its most favorable rate in years. Behind this movement are important reforms by Iraq's leadership, including efforts to stabilize the political environment, expand oil exports, and control inflation. With higher crude sales bringing more US dollars into the country, the pressure on the dinar to gain value has naturally increased. At the same time, new monetary policies from the Central Bank of Iraq are aimed at restoring domestic confidence. The result? A gradual but steady improvement in the currency's standing. Even with these gains, seasoned investors are urging caution, particularly when it comes to misinformation online. In 2025, self-proclaimed currency gurus continue to flood the internet with bold claims about sudden revaluation events or insider tips. Many of these individuals charge fees for so-called intel briefings, promote unverified exchange platforms, or promise exclusive rates not supported by any credible institution. While the upward movement of IQD and VND is real, exaggerated predictions of overnight windfalls are not. Financial experts warn that falling for such hype doesn't just cost money, it can derail long-term financial planning. No legitimate source can confirm exact timelines or guaranteed rates. True investing always comes down to patience, evidence, and sound decisions. Understanding convertibility is also critical. Unlike the US dollar or euro, the Iraqi dinar is still not freely exchangeable in most global markets. In 2025, the IQD remains largely non-convertible, meaning that everyday investors can't just walk into a standard bank or trading desk and expect to exchange large quantities for foreign currency. This limits flexibility and creates additional risk. While there is speculation that Iraq is working toward broader convertibility, no timeline or formal roadmap has been confirmed. Holding a non-convertible currency means accepting the potential for long holding periods and limited liquidity. Political stability also remains a deciding factor. Iraq's political climate continues to present challenges, even amid progress. Changes in leadership, policy uncertainty, or civil unrest can swiftly impact market confidence and currency values. Vietnam, while more stable in comparison, is not without its own risks, especially when factoring in regional tensions or global economic shifts. Experienced investors always include political stability in their risk analysis. Not doing so is a mistake often made by inexperienced or overly optimistic traders. Another overlooked factor is expropriation, a situation where governments seize private property or assets, often with little to no compensation. While Iraq and Vietnam are not actively engaging in this practice today, unstable governance always carries that potential. That's why diversification remains a golden rule. Putting all your money into just IQD or VND is risky. Smart investors also consider real estate, global equities, or precious metals as part of a balanced portfolio. In short, 2025 is shaping up to be a pivotal year for both the dinar and the dong, but it requires disciplined awareness. If you're serious about currency investing, take time to validate sources, seek out regulated trading platforms, and speak with certified professionals. Hype may feel exciting, but wealth is built through strategy.